I'm Brooke Thackeray with Horizons ETFs. Thank you very much for joining me today. Today I'd like to use the Horizons Seasonal Rotation ETF, ticker symbol HAC. Its weekly commentary is the basis for this market update. So let's jump right in and take a look at the market action last week. Here we can see the S&P 500 was up 1.8%. The Canadian stock market was up 2.4%. The big news last week was the September CPI that came in at 5.4% growth on an annual basis. That was a little bit higher than expected, 5.3%. It's actually quite a good number for the market overall. It's a little bit of a Goldilocks number. It wasn't too high where investors were really concerned about inflation really running ahead, and it wasn't too low to show that economic growth was contracting, and so we saw a positive response to this number overall. We did see the U.S. banks come out last week, generally speaking, with better than expected earnings, which also helped to bolster the market. This upcoming week, we don't see a lot of big, huge news-making headlines from the economic reports coming out, but we are in earnings season, so we do have Tesla, Johnson & Johnson, Procter & Gamble, PayPal, and Netflix, and others making their earnings announcements, expected to make their earnings announcement this week. Last week, we did see HAC make some changes in the portfolio. We increased its equity position and stepped into the technology sector, which tends to do well at this time of the year. If we take a look at what was happening last week in the marketplace for the S&P 500, here you can see on Monday it was down, Tuesday it was down, Wednesday. Now this was the CPI reporting day. Well, not a lot of action in the market after it was reported. A lot of intraday volatility between the different sectors as investors really tried to digest, is this good news, bad news? And then, well, we saw Thursday up substantially and Friday up as well for the stock market. If we take a look at what was happening in the yield for bonds last week, Monday was Columbus Day, so the bond market was closed. Tuesday, we did see a little bit lower from the previous day, the previous week. And then Wednesday was actually down for the 10 yield on the 10-year Treasury note. And Thursday down again, and then Friday back up again. Overall, it closed a little bit lower from where it was in the previous week overall. And we saw it come in at 1.59% for the yield on the 10-year Treasury note. If we take a look at what was happening last week with the sectors of the market here, you can see that in this case here, here's the reference of the S&P 500, 1.8%. Materials look like the big winner. In fact, it was really, if we take a look at the cyclicals in the sectors of the stock market, they did quite well. Industrials beat the stock market. Energy was a little bit lower, a lot of volatility, and this is in the U.S., a lot of volatility in the sector overall, and financials also a little bit lower, despite some positive earnings results coming out for the U.S. banks. We did see consumer discretionary actually do quite well last week, and the technology sector. So the growth sectors benefited other than the communication services sector. As far as the defensive sectors go, real estate actually did quite well last week. Consumer staples was positive, healthcare was positive, utilities was positive, but they underperformed the market. It really was a risk-on mode last week in the market. We saw a little bit of a switch into some of the cyclical sectors, despite even overall net falling interest rates. If we take a look at some of the subsectors here, in this case, I just want to point out metals here. Look how the metals and mining sector did quite well, as well as the steel sector did quite well. So we saw some select real cyclical sectors do quite well overall in the market. So where do we stand right now in the marketplace on a go-forward basis this week coming up? Well, it's going to be an interesting week in the sense that we're getting into the heart of the earnings season coming up. And it's going to be interesting to see how investors respond to the earnings. So far, with U.S. banks, it's been positive overall as far as the market goes. The market's moved higher on that as well. So this week, on average, over the long term, tends to be one of the weaker weeks of the year. Now, so far, here we're coming up to, well, it's October 18th. At this point, and the first 18 calendar days of the earnings months, January, April, July, and October, tend to be positive. And in fact, that's exactly what's taken place. But this week coming up tends to be a little bit rocky overall after the options expiry takes place on Friday, the third Friday of the month. We tend to find a little bit of volatility in the market this week on a seasonal basis, and also a negative trend on average as well. Now, following week is actually when the favorable 6-month period for the stock market starts. So we may see some attractive, if we do see some volatility, that could make an attractive start to the 6-month favorable period for the stock market. Thank you very much.